Last year has been a very incredible year for the team. We wanted to undertake the restructuring of the entire CapitaLand business. I think the thesis, I've said many times, we were not happy with the fact that CapitaLand share price for the last 20 years or so average trades at about 20 to 25% discount to NAV. We came with the thesis that we wanted to privatize the development business, to allow shareholders to at least unlock short-term value. I must say that the share price has held up quite well. At least so far, it's held up quite well. At least proving that the thesis has been right. I think going forward, the key is really about executing it right. In fact, I often joke with my team, we are a pretty well capitalized startup. We can generate pretty decent profits, but in the private equity side, even though we have some track record in the past, through our Raffles City funds, a series of development funds, but the private equity side is something that I would say that it is a new journey for us, new teams that we are building, and the important priority for us is, I mentioned before, our ambition is a global one. We want to be able to build our capabilities so that we can one day be amongst the more significant real estate investment manager globally. But in the short term, in the next 5 years, our focus will largely be on Asia, where the opportunities are tremendous. I think that if we can get the earnings right for the investors, being able to deliver a 200-300 billion AUM just in Asia would not be difficult. But the fundamental thing is we need to make sure that we deliver high quality, consistent earnings for investors on the private side and on the listed side.
The focus areas that we were aiming to deliver to shareholders: high quality PATMI and strong growth in PATMI, which you see in cash PATMI almost doubling year on year, or more than doubling year on year. We want to keep the balance sheet in a robust and deployable position, net DE down to 0.48, giving us resilience as well as deployability to take advantage of opportunities that may come our way. We want to be able to share the high quality PATMI with shareholders. Hence, we convinced the board, and the board supported our proposal to pay a 15 cents per share dividend to thank our shareholders for their support, both through the restructuring and a difficult year last year when we had to cut our core div. Capital recycling discipline, very, very important for us in the next 2 years. So we hope we have demonstrated that with a record year in capital recycling, as well as being able to sell well, delivering good portfolio gain. And lastly, not least, but certainly not least, growth in our core business. Funds under management grew by 10% to 86 billion. FRE grew by 34% to 409 million. You bring all that back to the metric that brings it all together, and that's our return on equity. So we believe we've laid down a good marker in our journey to a sustainable double-digit ROE.
S-REIT happened to be celebrating its 20th anniversary this year, so I do believe the market has reached a point that it is getting mature enough. And I think that's where we start to look at how returns like on the risk-adjusted basis. I think moving up risk curve does not necessarily mean that you are not getting better risk-adjusted returns. Similarly, going for core returns, it doesn't necessarily mean that you are taking less risk. So I do think investors are equally discerning in picking up their exposures. So I do think that's probably where the broader environment is challenging. It forces us to be a little bit more specific, go deeper to find what is good and what is not good. And I think that's probably, hopefully, will differentiate the better operators from the rest of the operators.
What attracted me to CapitaLand was its current journey in terms of spinning off its development business and repositioning itself as a globally focused asset management business that has a balance sheet that it can use strategically to fund its growth. The business is incredibly well positioned for growth, both in its traditional expertise being real estate and then also into alternative asset classes that Simon and I have received from all levels at CapitaLand, both at the board level, at the SLT level, and below that as well. We're all trying to learn. The business does come very much from a development-backed DNA. people are trying to understand what does CapitaLand look like in 2 to 3, 5 years from now. But just in the last 3 months that I've been on board, I'm starting to see everyone understanding the vision. I would just add that in terms of your comment about FRE versus FUM, I think as we start raising larger, more discretionary funds that are at a higher risk spectrum, so value add and opportunistic, that's when we'll start seeing a big jump in FRE in terms of being able to attract large levels of discretionary capital up the risk spectrum. Traditional private equity fee structure, we will obviously have the ongoing management fees coming in. The carried interest is where a significant amount of profit for an asset manager sits. That is obviously back-ended, but over time you'll start seeing that the ability of a good asset manager to generate that carried interest becomes much more recurring than one may think.
I've always been amazed over the decades that CapitaLand didn't really fully move into private equity. So when I got the call up, it was just a clear yes straight away. And the surprise factor has been very little because I think I've known CapitaLand over the years. We've brought and sold from them. The leadership is very open, it's very nimble, it's got a very clear flag on the hill. The diversity through the teams is very strong, which I think is really important to make great investment decisions. But we'll also continue to do what we've been doing very successfully, which is buying one-off properties, matching it with investors where you will get an acquisition fee and a disposition fee. So there will be a basket of different vehicles that over time will produce various events much more regularly. Can see a very consistent, clear purpose of everyone, and I can see a culture that's very open and transparent and very kind of pro-employee in terms of their training and development. And the upside is unbelievable. I do believe that we truly can become one of the world's best in the medium term. And the big focus currently is putting in place research, product development, and capital raising capabilities globally.
I think the policymakers are very clear in their minds. The policy stance hasn't changed. So 房住不炒, that's still very much the theme. Last year, we did see a lot of difficulties for the developers because of the 3 red lines, financing difficulties and policy tightening. The stance will not change, okay? But of course, the policymakers, they will take in economic indicators, right, to adjust. This is always what the central does. They will make adjustments along the way. So again, this is the key thing. China wants to see stability. They don't like instability.
Last year, besides managing the COVID situation, which was very challenging, we managed to grow, right? And we managed to grow on 2 fronts. Number one is to add new units to our inventory, which is about 15,000 plus units. The other part is we managed to open about 8,300 units. And these 8,300 units actually contribute to the fees that we collect. We have also made use of the last 2 years to put in a lot of technology in our business. We've moved almost everything to the cloud. It's very easy to deploy a new property now in any country in the world. Operationally, we've put in a lot of new technology to minimize the headcount that we need at the property.
We are constantly reviewing opportunities, in the various markets, and really the idea is to make sure that it fits in with our strategy and give us access to new products, new capabilities, new capital partners. Thank you all for the patience, the support over the last few years. Firstly, from the Ascendas-Bridge merger, and following us through the COVID, having faith in the team that we could steer through the COVID, the restructuring, and really following us through all the way. It's not been, I would say, the easy journey with so many ups and downs and so many surprises. But I just want to commit at least to the audience here. I think the team is working very hard to make sure that we achieve the global ambition that we set out to do, with immediate focus next few years in Asia, delivering on what we want to do, delivering high quality earnings, sustainable earnings to our investors across the various vehicles, because that is going to be the fundamental foundation for us to build an AUM game.